Welcome back. You're watching the special on Money, 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 and we are in conversation with Homi Mistry of Deloitte and also Kuldeep Kumar of PwC and Karthik Zaveri of Transcend Consulting. So now the big question. Should you be moving your retirement savings from the EPF to the NPS or the National Pension Scheme, which also offers you the advantage of taking equity exposure? That exposure could be as much as 50% depending on what you really choose. Let me come to you, Karthik, on this. The benefits, the pros and cons. The pro, of course, being with the EPF that it's very steady. It's fixed income. There's no question of market risk, etc. So what would you advise? I mean, how much should you put within that 1.5 lakh limit, the additional 50,000 limit? How much money should go where?
Now, if you look at pure mathematical analysis, then NPS is still a winner. The reason is very simple, that the first 40% of that NPS tranche is completely tax-free, which is clarified in this recent clarification also. The second 20% is going to be taxed, and the third 40% of your NPS corpus, you have to compulsorily put into an annuity. So that's
an important caveat, that
absolutely.
You can't think of withdrawing the entire NPS lump sum.
Correct.
40% of that has to go for annuity. That will be your pension after you retire.
Absolutely. And now, if you were into that equity option, then that 60% of NPS which you are withdrawing, and compare that with the total EPF accumulation that you will withdraw, is almost equal. So which means that 40% of that NPS corpus which is getting invested in the annuity is an extra, complete extra. Now with the tax change and reverting back on EPF, you have a little more money in your hand with the EPF, and where you can decide to do pretty much whatever you want. But if you look at it in terms of merit of net worth, what is the value of your money 20, 25, 30 years down the line, the NPS still is a winner purely because of that 40% first tranche being tax-free.
Okay, let's get in Kuldeep as well on that. Now, Kuldeep, you were hearing it from the planning perspective. Most of the planners seem to be in favor of NPS. But what is it that you're picking up when you have conversations with corporations, with industry members? Because not a lot of employee organizations are offering NPS as an option or as an alternative as yet.
No, absolutely. A lot of corporates are actually doing that. And why it is so? Because if employer is contributing to the NPS up to 10% of the salary, that is a tax-free. So you get a tax break when you contribute. And the second is that, with the annuity return of 5-6%, people still don't feel very actually attracted to that. Now, suppose if someone is investing in the Provident Fund, he gets the entire corpus, say, after 58 years, then he has the option to invest anywhere actually. I mean, and if he, by managing his own fund, if he believes he can actually, earn more than the return which annuity would be earning, so he will go for that option. But the NPS will bind him that up to 40%, he will have to absolutely buy the annuity. So to my mind, I think that both things go hand to hand. Some portion has to be allocated to the NPS because of the tax break when employer is contributing, and you also contribute to the Provident Fund, which is mandatory or subject to employer-employee if you are getting more than 15,000 rupees.
Well, Kuldeep mentioned 58 years. That rang a bell in my head. The other change that has happened with EPF, which has nothing to do with Budget 2016, but the change in the EPF withdrawal rules, which say that you cannot withdraw the employer's contribution of the corpus till you retire, which according to the Government of India is 58 years. That's a major disadvantage of the EPF, is it not? Homi, what would you say? Your own thoughts. I mean, this debate between NPS, EPF, how much should go where?
Yeah, so I think earlier the rule said that in the case of domestic employees, you could withdraw the money at the age of around 55. But now I know they've extended by another 3 years. They made it now 58 years. So one will have to wait for another 3 more years, to withdraw the money.
The employer's contribution.
Employers as well as the employee's contribution.
But that will become the entire corpus then.
Yeah, like exactly. That will become the entire corpus.
There's a huge limitation there in terms of reaching out for your money when you need it the most.
That's
so
correct.
Therefore, how do the two stack up, NPS versus EPF?
See, what happens in the case, again, as Kuldeep and everybody has mentioned, the advantages of EPF is it's completely exempt from tax. It's EEE. Your money is safe, your money is secure.
But you can't reach out for it till you're 58 years old. That's a very important change in the law that's taken place in the last couple of months, I guess.
That's correct. But for certain purposes, you can withdraw the money in case you need it, for example, for some medical emergencies, for education, for buying a house. So then those kind of, under those conditions, you could withdraw money earlier.
Okay.
Now, coming back to NPS, maybe it's more attractive from the point of view of if the returns are much higher, etc. But the fact is that again your money is blocked. People don't want to sometimes block their money. They don't want necessarily a pension. They don't want to wait for a very long period of time. And many of the youngsters want their money earlier. So many of the youngsters don't even put their money into PF. They'd rather have the money with them, have cash in hand, rather than in putting their money in PF. That's what we've been observing, of late. And yes, corporates have started taking to NPS. I think the drawback has been more from a tax angle, because earlier when you withdrew the money, it was fully taxed.
Yeah.
Now, of course, there's a benefit up to 40%. And if they really want to make it even more attractive, maybe the government could look at NPS and maybe go on the EEE system, so that if you were to completely withdraw the money, even that would be tax-free.
It could be a thought, considering there is no long-term capital gains tax on equity investment, and since NPS has a large equity component to it, it perhaps could be a thought. We'll take a break on that note. On the other side, the whole idea of India moving towards a pension society. The government said that was the reason why it introduced these changes in the first place, changes which have been rolled back. So where are we left? Are we going to be moving towards being a pension society? That's coming up after a break.